Hey everyone, good afternoon. How's everybody doing? This is Ryan talking from the Black Room here at T3, and I wanted to do a video on who I give my control to when I'm in a position. So I had a trade in the ARS today, ARRS, excuse me, and I was actually on the mic when I ended up calling this. This is the call that's in the Black Room, and I was actually moderating when I placed this trade. And we had some interesting price action after the trade got initiated, and I had some questions about my reaction to the price action after the trade was after I entered into the position. And so I thought that we had a great conversation, and I thought it was a great topic for me to expand upon because I struggled for a while with letting a position dictate my decision-making process and dictate my edge versus allowing my edge to play out in the market, right? And so only I as a trader have the opportunity of whether or not I give a position control over what I do, or whether I take control through my edge and manage and act accordingly in the stock market. Okay, so that's kind of what we're going to dive into here. And so this was the trade that was set up. First off, we'll jump out here to the daily chart, right? This was a pro gap down under this area of support. We did have a weekly pivot to the left here, which we were able to get a target 1 out of, and it was seeming like it was going to continue to go lower, but it ended up not going lower. Still a profitable trade on the first and second half. And so that was the larger time frames. It was a professional gap down, which, as you guys know, I love to play. Okay, so I was on the mic. We had a lot of setups that I thought were okay, nothing that really jumped out at me until the Qs did, which were trending today. The Qs 5-minute chart did this, right? Which was at 10:45 here. Okay, so Q's 5-minute, we ran up, we ended up bullying the gap, we ended up getting the trend day signal later, but we ended up trending very nicely. Then we got this wide range bar and inside bar. And when I was on the mic, I said that this is probably an opportunity to get short. I don't think that the market is that it's at a topping point here, but I do think it's good timing for me to look for a short position. And I also am familiar with this pattern where we get this nice big move, we get this wide range bar at the end. We've talked about this on prior videos about the healthy trend. Now we started to get this volume spike here and this wide range bar at the end of the move. Okay, then we got this inside bar, and then we ended up breaking lower here and pulling back on the 5-minute chart. Okay, so 10:45 here on the Qs, ARRS. If we jump over here, same time, 10:45, right? So I wanted to take a short position. I thought I had good timing with the market, and out of everything that I had, this was the weakest, all right? So this was a 5-minute breakdown, but I really like the price action here in the 2-minute chart, right? So we have this breakdown, and we get this consolidation, and if we look at the price action at the point of transition, which is this breakdown here, we were basing at the lows here, all right? We weren't, let me open up my pencil here. We weren't basing up here. We were basing at the lows, right? So I like that point of the price action at the point of transition. Okay, so the short was under 22.90 and stop above 22.13, which was right above this prior base here on the 2-minute chart. Moving average curling over price here, and we ended up getting this breakdown. Now, this was some pretty choppy trading. First target was 260. Right, this was first target, which was that weekly pivot that we talked about before, and we got this nice move lower, and then we got a really strong reaction here, right? We started getting some green bars. Now, there was talk about the 1 minute, which was even wilder, and right? So here's the 1 minute where we got these wide range bars. So we got this breakdown. It was approaching one target here, or target one, and we got this strong reaction. Now, this is what's going to tie us into the topic of this video is, am I going to allow these green bars on the chart dictate what I'm going to do in this stock? Let's go back to right here, right? Okay, let's go. Am I going to allow the green bars that are presented on this chart dictate what I do in the position, or am I going to keep the control over what I do with my edge, right? And what my edge says is keep the stop up here. The stock a lot of times will come back, retest the prior resistance, or prior support, which becomes resistance, and it'll roll over. Now, that doesn't always happen, and I said when I was on the mic, because I was asked, my thoughts about after I got triggered in this position, what it felt like, right, living through this. And I was honest. I was like, it didn't feel necessary. It didn't feel good, right? Seeing these green bars is never a good feeling, especially after we were at almost a target one here. But I also said that I'm going to stick with the plan, right? And we ended up sticking with the plan. We got to a nice target one here, and the trade continued, and it looked really good lower here, right? Especially right here. We lived through this shakeout, and it looked really good lower here, but it just couldn't break that support. So we ended up covering just before it ended up moving higher here. So I do feel like, even though this was only a little bit over an R, I feel like I captured the most that I could have, right? I mean, I could have covered some at the lows, but the reality was I wanted to let it play out and see if it could continue to trend lower, which it didn't end up doing, right? So what I wanted to mainly talk about is when I saw this bottoming tail, and this was a green bar at one point, right? So this was a green bar. It's really important that in these times, if I have an edge that I'm familiar with, if I have a strategy and a management style that I employ, it's really important that I not make management decisions based off of emotion, and I allow myself to make management decisions based off of the information that the chart is giving me objectively, right? And that's the key. And so once I started to feel the emotional discomfort of those green bars moving against me, I knew that now's not the time for me to make a snap decision. Let's see what the stock gives us, and I'm going to stick to my plan right now, okay? And so this ended up working out in my favor, because once I got those green bars, I could have just as easily covered break even, and I would have gotten exactly what I wanted out of the market. I would have been out of the position, and I also wouldn't have lost any money. But I also wouldn't have made the money either. Okay? So let's take an example of TRMB, which was the trade I called later today, and this was a buy setup with this nice shakeout beforehand, right? And I know that this had limited target. Target one was $41. We got like 3 cents from it at one point, but I really wanted it to interact with $41. I really wanted to break $41, so it was a little bit short of target one here. But what my management says is, if we started to get this 5-minute pivot like we did here, where we make a new high, and also we're coming into the last 30 minutes of the day, then I should trail below the pivot, right? So this is an example where this was roughly a break-even trade. I mean, I think I made maybe a quarter of an R, maybe. But this was a opportunity for me to say, okay, I am not thrilled with how this stock is pulling back, but I am going to stick with my management. My management tells me that I should be trailing underneath this significant pivot, which I ended up doing, and I ended up losing. I would have never taken the full stop here, but I ended up not taking a loss on this position. It basically ended up being a nothing trade. But the difference is that I was able to objectively internalize and interpret the price action that the stock was giving me, and this wasn't a snap emotional decision. All right? So I am 100% a pattern trader, and that's what I trade. So I think that technical analysis is incredibly important to me. That's what I do day in and day out. So I do think that reading price action is very important. But there's a fine line between reading price action and allowing the price action to define you, and allowing the price action to change what you're going to do and how you're going to implement your edge. All right? So I hope this was helpful, because I, like a lot of people, can sometimes experience, not all the times, but sometimes experience some emotional discomfort if a trade moves against me. But that doesn't mean that I need to necessarily make decisions based on that emotional discomfort. Okay? One last thing that I want to tie in, because we were talking about the 1 minute chart before, one thing that also helps me is if I'm taking an entry on a 5 and 2 minute chart, I don't look at the 1 minute chart unless my management tells me to, like we're coming into a target area. But if the stock is just moving back and forth like it did here on the ARRS, I don't even look at the 1 minute chart, because sometimes if I'm on a 5 minute pattern, there's a lot of volatility and back and forth price action on a 1 minute chart. And so I don't give the opportunity to allow that chart to dictate or allow that chart to influence my emotions. I just don't look at it until I'm supposed to. All right? So I think this is a really critical thing. I know it has been for me. And basically, who do I let manage the position? Do I manage the position, or do I allow the stock to tell me what to do based on how it's trading? All right? So thanks, everybody. I hope this is helpful. I hope you guys have a great day, and we will talk to you soon. Thanks, guys.